Today, let's talk about another foundational stock to add to your diversified and long-term stock portfolio. That is JPMorgan Chase, ticker JPM. Banking is such an important sector in the economy. A diversified portfolio is not complete without a bank. However, there are many banks in the US, 4,400 of them, and 760 of them are publicly traded. We are going to tell you how JP Morgan is best of breed among them. JPM is probably a household name, but I also want to say that its business is very diverse. It spans across consumer banking, commercial banking, and investment banking. We like JP Morgan as a foundational stock for a few key reasons. Number one, its scale and reach. It's the largest bank in the US and among the top 5 banks in the world. It serves half of the US households and 90% of Fortune 500 customers. Number two, we like JP Morgan's clear market leadership. It's the number 1 investment bank as well as the number 1 consumer bank. It attracts, in the US, the most consumer deposits compared to other banks. Number three, we like JP Morgan's tremendous earning power. Last year in 2021, it generated $48 billion in net income. While looking at return on equity, its 10-year average ROE was 4 percentage points higher than its peers. Number four, we like JP Morgan's innovation. We like JP Morgan as an innovation powerhouse. And number five, JP Morgan offers strong return to shareholders. It's able to do these two things at the same time because of its earning powers and its scale. Welcome to SafeSea, stocks and investments for serious investors. At SafeSea, our mission is simple: discover, analyze, and monitor solid companies for serious and long-term stock investors. We are not investment advisors. We are simply sharing our own research as individual investors, leveraging our experience in investment banking, strategy consulting, CFA background, and MBAs from top and Ivy League business schools. If you like what we do, follow us and subscribe to our channel. Today, we'll discuss 3 things about the company. Number 1, what they do. We'll look at the company's business model and strategy, its competitors, and its historical performance. Number 2, what we like about the company, including industry trends that benefit the company, its competitive advantages, and peer analysis. Number 3, when to buy the stock. We'll look at the company's share price trajectory and historical valuation. We'll look at analyst ratings and target price, and given all these analyses, our point of view on when to buy the stock.
Hi, I'm your other co-host for this presentation. Basically, as serious long-term investors, we believe having a strong foundational understanding of the company is essential in making these investment decisions. We are here to help you with that and also share our point of view on what we believe is the right entry point for the stock.
Awesome, let's get started.
All right, so let's start with what JP Morgan does.
We already mentioned JP Morgan has a very diverse business portfolio. As a matter of fact, they organize the business into 4 major segments. The first one is consumer and community banking, or what they call CCB. Think about your debit card, credit card, home loan, auto loan, and a retail branch. This all goes into CCB, consumer and community banking. The second business segment is the corporate and investment banking, or CIB. This segment includes the traditional investment banking service, say advising companies on mergers and acquisitions, IPO, or debt issuance. Another piece under corporate investment bank is the sales and trading business.
Hey, so this is where one of my favorite shows on HBO, Industry. All the main characters, they do work in investment banking.
Yeah, that's right. They all work in sales and trading desk on the Industry show. The third piece I want to mention under corporate investment bank is the treasury service for companies. Now, we talk about CCB, CIB. The third segment of JPM is commercial banking, or CB. This is a segment where JP Morgan does serves the banking needs for companies like corporate credit card, debit card, as well as lending to business, including real estate companies. Last but not least, the fourth segment of JP Morgan is the asset and wealth management, or AWM. This is a segment where it houses asset management. Think about offering like mutual fund ETF, as well as the global private bank. So think about serving high net worth individual, help them manage their generational wealth and and other needs.
So basically, these are financial advisors advising either rich people or mass affluent people.
Last year in 2021, JP Morgan generated 125 billion in revenue across these four business segments, making it a Fortune 50 company.
In terms of magnitude, the $125 billion in revenue, I think it's almost one third of what Apple generates in revenue and almost a fifth of what Walmart generates in revenue. So it is quite a big company.
Yeah, you're absolutely right. And then I want to also dive into how much each business segment generated for JP Morgan. In general, CCB and CIB, their consumer banking and investment and corporate banking, generated almost 80% of JP Morgan's revenue, splitting half and half. The rest of the 20% came from CB, commercial banking, and AWM, asset and wealth management.
I think it's interesting to see the big spike in corporate and investment banking. So it grew tremendously between 2019 and 2021, mainly because there was a lot of M&A and investment banking, a lot of deals happening over the last 2 years in 2020 and 21. So that explains the big spike. It's also interesting to see how their asset and wealth management is also growing compared to the other two big business segments.
Yeah, good observation here. Um, well, pivoting to geographic revenue, JP Morgan is primarily a U.S. business, as more than three-quarters of its revenue came from North America, followed by 14% from Europe.
All right, so let's take a look at who JP Morgan competes with across these four business segments.
Um, as we suspect, it's a lot of traditional banks here, especially for JP Morgan's consumer banking and commercial banking business segments. Names like BofA, Wells Fargo, Citibank, Capital One, US Bank, and PNC are the usual suspects in terms of competitors. Now, for corporate investment banking, JP Morgan also competes with Goldman Sachs, Morgan Stanley, BofA, UBS, Barclays, among the bulge bracket investment bank. Lastly, for the asset and wealth management AWM segment, you come across competitors like Fidelity, Morgan Stanley, UBS, Bank of America, Goldman Sachs.
I just want to add here that JPM is a clear leader in the consumer, the retail banking, the CCB. It's not a big player in the commercial banking. So that's why you see like the likes of Bank of America, Citi, and PNC as the main players in commercial banking. But other than that, with the exception of commercial banking, JP Morgan has clear leadership in the remaining three segments.
In addition to traditional banks, JP Morgan also competes with quite a lot of fintech companies. Can you tell us more about it?
Sure. I think the concept of fintech or financial technology companies is becoming more prevalent and the competition is intensifying since in the last decade, I would say. So since 2010, almost after the financial crisis in 2008, 2009, there are a lot of emerging players that go and compete directly head to head with these traditional players that we discussed on the prior slide. For example, in the consumer and community banking segment, you would have heard of SoFi, which started as a student loan company, now is expanding into all type of financial products, but mainly focused on the millennial customer segment, Chime, which is a mobile only, no branch, no physical branches or ATMs, but it doesn't have any overdraft fees. So it's competing with a digital first strategy. Affirm, you would have heard recently when you shop on Amazon or Walmart, it is a buy now, pay later type of company, which is once again a digital first. Rocket Mortgage, which is like a lending company, but all digital interface. In terms of commercial banking, like meeting the needs of small mom and pop businesses, there is Square. So whenever you swipe at a local coffee shop or a restaurant, I'm sure you would have seen this logo. So they cater to the business needs of the business customers, like restaurants, for example, via a payment terminal. In corporate and investment banking, this is a world where it is all relationship based. So most of the fintechs in this space is mostly focused on automation and back office operations. Asset and wealth management is a very interesting segment. I'm sure all of us would have heard about Robinhood, which provides like a operates as a low cost discount brokerage company, but it made investing fun via its interface. SoFi also recently entered into the asset and wealth management. It's a broker now. And of course, the Ally Bank, which is a digital player. Sigfig, once again, it provides software for wealth management to other banks, but it also offers direct to consumer as well. So overall, I think the fintech landscape is rapidly evolving in the banking and presents a very attractive opportunity, not just for the fintechs, but also for the banks to innovate.
I would just add that each of these fintech tackles a specific product or use case, unlike JP Morgan, who's a universal bank with diverse business lines. But you cannot just let them eat your lunch piece by piece. Any sensible bank should come up with a strategy to compete with them.
It's actually an interesting point. You're right. Each of these companies, they started with a specific use case. For example, SoFi started as a only student loan company for millennials, for new college graduates. But now you look at SoFi with its almost 3.5 million customers, they're offering every financial need, including auto loan, home loan, checking account, debit card, credit card for that particular segment. Same thing, Robinhood started as a investment platform, but now it's recently has its own banking license and now offers its own checking and high yield savings accounts.
JP Morgan powerful CEO Jamie Dimon has this to say about fintech competitors. Quote, 20 years ago, we didn't have to deal with all the shadow banks, all the fintech, and the big tech. We do now. That's a reality. We are not worried about it. We are not afraid of it. We are simply recognizing it. We've done quite well, and we expect to continue to do well. We have to innovate at the speed and at pace like they do. End quote.
Jamie Dimon, if he says something, I would pay attention. He's a well respected and super duper powerful person in the financial community. So the fact that he's acknowledging the likes of big technology companies such as Apple and Google as potential competitors, the likes of fintechs like we discussed, like the SoFis and the Robinhoods, that to your point that they're about to eat their lunch or already started eating the bank's lunch is a big industry trend. And I'm sure other banks would pay attention to that as well. But in our opinion, I think JP Morgan is one of the very few large banks that has been strategizing and coming up with offerings that go toe to toe with some of these digital first interface led players like the fintechs.
Let's talk about this money slide. How much JP Morgan made in terms of top line profitability, how much it generated in terms of return and dividend. The gist here is, in my opinion, in the past 5 years, JP Morgan's revenue CAGR was 7%, net income 5-year CAGR was 14%. Pause here for a second. That means JP Morgan is growing profitability at twice the rate as revenue. That's pretty good. EPS CAGR is 20%. The reason why it's higher than net income is probably a function of share buyback, which is a form of returning capital for shareholders. Return on common equity is also an important metric for banks. The highlight here is from 2016 to 2021, return on equity for JPMorgan has expanded 5 percentage points to 15% in 2021. Last but not least, banks typically pay a dividend as they are established business. For JPMorgan, their dividend has grown at a CAGR of 15% over the past 5 years.
I think this is quite a impressive financial performance. Like just given the fact that it is a Fortune 50 company growing its top line revenue at high single digit year over year, that itself is a great growth story there. But more impressive is the net income. So the 37% profit margin in 21 reminds me of Apple. Like software companies, very few companies have this type of profitability with that type of scale. All right, now that we talked about what the company does, let's move on to the second section, what we like.
The first thing we like about JPMorgan is its tremendous scale and reach. Let's use some numbers to put that in perspective. For example, JPMorgan has 3.7 trillion in total assets. We talked about that makes them the #1 bank in the US, and it has almost a trillion more total assets compared to #2 bank, Bank of America. JPMorgan serves 66 million US households. The total US household numbers are around 120 million. That means JPMorgan serves more than half of the US household. JPMorgan also serves more than 90% of Fortune 500 company. So this gives good perspective of how big and far-reaching JPMorgan is.
I think like just to your point about putting things in perspective, the entire US GDP is around 20 trillion, meaning the total economic output of US as a country. So putting the 3.1 trillion that JP Morgan manages, it kind of helps us put how big is really JPM in terms of its scale.
Another thing that we like about JPMorgan is its clear market leadership. In its two biggest business segments, consumer banking and corporate investment banking, it holds undisputable #1 position in many aspects. For example, in consumer banking, it's the #1 US retail deposit bank. To put it in perspective, for every $100 deposited in bank accounts, $10 are deposited with JP Morgan. It's also a very strong credit card issuer. Just think about JP Morgan Sapphire card, how much progress it has made in the past few years. In terms of corporate investment banking, it's #1 in what we call a league table, basically being the #1 advisor for corporates in terms of M&A, IPO, and debt issuance. For the remaining 20% business and asset wealth management and commercial banking, JP Morgan also has very strong market position. For example, in terms of client assets under management under the AWM business, it has grown its client asset by more than 2 times in the past 10 years. The third point that we like about JP Morgan is its tremendous earning power. We talked about how it generated 48 billion net income in last year. In addition to that, we also like JP Morgan's above peer return on equity and book value growth. Let's first take a look at return on equity, or in banks world, return on tangible common equity. The punchline here is in the past 10 years, JP Morgan's return on equity on average was 15%, which is a 4 percentage point more than its peers. Secondly, JP Morgan also grew its tangible book value per share by 8% CAGR in the past 10 years. Just pause a second here. When I say tangible book value, it's basically the equity value for banks, or or what's the bank's worth. stripping out liability, etc.
Yeah, so basically the right hand side chart is a measure of the book value of the company, how a bank perceives itself. So the book value per share has been increasing at 8% CAGR according to GAAP accounting standards, which every other bank is measured against. And if you look at the bottom right hand price to tangible book value per share, which is like PB ratio that you are used to, you can see that over the last 10 years, the PB ratio for JPM has been increasing from one PB ratio to 2.2 times, which is pretty impressive by itself.
JP Morgan's tremendous earning power is a function of solid top-line growth and prudent expense management. In the bank's world, they like to use a ratio called overhead ratio to measure how efficient the bank manages its expenses. Mathematically, overhead ratio is simply non-interest expense divided by revenue. Based on this, of course, the lower the overhead ratio, the more efficient the bank runs itself, or aka manage its expenses. For JP Morgan, its expense ratio has decreased from 65% 10 years ago to 57% in the last year in 2021. Again, lower the overhead ratio, more efficient the bank runs. Comparing to its peers, JP Morgan is doing great. In terms of 10-year average overhead ratio, JP Morgan outperformed peers by a whole 8 percentage point. Zooming in a little bit and look at how JP Morgan compares to its main peers, meaning like Goldman Sachs, Bank of America, all those big banks. At 57%, JP Morgan's overhead ratio or efficiency is top of the line. With the exception of Goldman Sachs, JPM's efficiency ratio is 10 percentage point lower than typical retail banks like Bank of America, Citi, and Wells Fargo.
Right. So Goldman Sachs is an investment bank, as you said, right? And Morgan Stanley. But the big four banks in the US, JP Morgan, Bank of America, Citibank, and Wells Fargo. So if you look at JPM overhead ratio here, it's 57% compared to the overhead ratio of the other three big four banks, which is like 67%. So its operational efficiency is 10 percentage points higher or better compared to the other big four banks.
Now we talk about JP Morgan's tremendous earning powers because of solid top-line growth and prudent expense management enabled by the scale and reach. We would also argue that JP Morgan is one of the most innovative banks in the US, leveraging its tremendous earning power. They plow back a ton of money back to investing in themselves. In 2022, JP Morgan invested $14.7 billion in total, and that spans across all four major business lines, including $7.5 billion, or around half of the total investment in consumer and community banking division, which makes total sense because this division is actually returns the most return on equity for JP Morgan at 41%. Higher than all other three business segments. Consumer banking is also a very volume and driven and mass business, which needs technology to help it to become scalable so that less human intervention or labor input would be needed, and that would feed back into JP Morgan's lower expense ratio, which we just talked about. Now, among the 14.7 total investment, half of it is actually in the technology piece, with the rest spending across like hiring new bankers, advisors, marketing, expanding into new countries, etc. The 6.7 billion technology investment is truly impressive. It's like 5% of their revenue, and if you and to put it in perspective, it's higher than fintechs like Chime, SoFi, Affirm's revenue combined. To be fair, you can say banks spend a ton on technology anyways because you and I all use digital online bank apps and their website, etc. But to be clear, when we talk about a 6.7 billion technology investment, it's the pure investment into creating new technology, or what JP Morgan called change the bank. That excludes anything like maintaining the online banking platform, for example. Larry Feinsmith, JP Morgan's head of global tech strategy, has this to say about JP Morgan's technology investment. While other tech companies have a narrower scope of things they do very well, what differentiates JP Morgan Chase is their size and scale, which is simply unparalleled. That reminds me of recent news. We all heard about how Stripe, Lyft, and Chime, those tech companies, started laying off people. JP Morgan actually announced they would add 2,000 engineers throughout the world. Their ability to invest in tech talents across business cycles is pretty impressive.
All right. So, given this type of magnitude, like $6.7 billion in technology investments, JPM is a huge innovation powerhouse in and by itself. So let's take a look at some of the examples in how they incubated some of very exciting use cases or companies within JPM. The first one is Onyx. So we all know what Bitcoin is. Basically, Bitcoin is a cryptocurrency but powered on blockchain technology. JPM, as we discussed, is one of the world's largest corporate and investment banks, meaning its customers. Let's say Walmart is a customer of JP Morgan. So Walmart has branches or subsidiaries across other countries, right? So a common use case that they tackled using the blockchain technology is Walmart as a customer needs to take money payments like accounts payable, accounts receivable from vendors from other countries. Each time you do that payment cross country, you have to deal with payment processing, you have to deal with foreign exchange, and all the underlying costs associated with that. So JPM, leveraging the blockchain technology, what they did was using JPM's own dollar, crypto dollar or virtual dollar as a backing up currency. Now Walmart can take and accept payments from its vendors and vice versa using that underlying JPM's virtual currency. So they are taking out a huge cost in payment processing and providing that real-time type of transfer between its customers and its vendors across countries using this simple blockchain technology via their incubated in-house entity called Onyx.
So basically saving time and cost for their customer as well.
Exactly, and customer experience.
Another technology platform incubated in-house by JP Morgan is Story by JP Morgan, which is a digital property management online platform. The first and foremost use case this platform is going to solve is the painful rent payment issue. To put it in perspective, we have 100 million Americans paying rent, or they pay 500 billion rent per year. But roughly like 80% of this rent collection is still done on a non-digital platform, for example, by checks. And so also in addition to rent payment issue, this platform is also going to provide property owners with the data, the market data and analytics they need to decide on, for example, how much they charge for rent. So why is this important? This platform serves two important groups of JP Morgan's customers. One being the property managers, which is property companies, and secondly, the consumers like you and I who pay rent. And the property managers are customers for JP Morgan's commercial banking business, and you and I are, of course, JP Morgan's consumer banking customers. In addition to that, the owners of this rental property, they are likely to be high net worth individual that could be potential customers to JP Morgan's private banking business as well. Another good example of JP Morgan's technology incubating capability is this thing called Capital Connect by JP Morgan. As the name suggests, it's kind of a match.com for startups and investors. If a startup wants to raise equity funding or founders want to trade their startup share to a secondary market, this is brilliant in a lot of sense. Of course, it provides a good user experience and solve a major pain point for startups. It also leverages JP Morgan's huge network of potential investors who are already JP Morgan's clients, such as private equity firms, venture capital firms, and high net worth individuals. The startups themselves can ask for introduction to this high net worth, to this potential investors on this platform. In addition to other functionalities like manage a data room, looking at recent valuation of other fundraising rounds, for example. It's brilliant because these founders and startup owners, well, maybe let's talk about the startups. They are potential customers when they grow to become an IPO candidate. They are potential customers for JP Morgan investment banking business, and also this startup founders, when they go IPO and become uber rich, they could naturally become JP Morgan's wealth management client as well.
I think these are like three perfect use cases for JP Morgan's organic innovation. We are incubating three different businesses under the JPM umbrella. Onyx for corporate customers to cater to the needs, right? And then Story to cater to the commercial banking customers such as real estate firms. And finally, the Capital Connect to cater to the asset and wealth management also, as well as the consumer banking. Just leveraging these developments in the fintech sector over the last 10 years and understanding who JP Morgan's main customer base is and what their competitive advantage is and how do you solve for their unique needs with the up and coming technologies. I think it's very impressive how they're using organic incubation, meaning starting companies within your own umbrella and using the JPM brand is very impressive.
Yeah, they're building fintechs to compete with fintechs. In addition to technology investments in the key or the traditional banking service, JP Morgan is also very good at using M&A or mergers and acquisitions to drive inorganic innovations. Since 2020, JP Morgan made 15 acquisitions that are at first glance very irrelevant to JP Morgan's core business as a bank. For example, Frank is a student financial aid and scholarship online platform. JP Morgan is using it to attract future customers when at the early stage. Another example being the acquisition of Infatuation, or what we know as Saget, the restaurant review platform. It's actually, I think it's interesting because it got built into, for example, Sapphire, JP Morgan Sapphire credit cards as a value add service. Another example being a loyalty rewards program manager like CX Loyalty, as well as a luxury travel agency like Frosh.
So I think like maybe it's easier for us to understand. So I have a Chase Sapphire Reserve card. So the main use case that comes to mind is when I plan a vacation, right? So you need to look for hotels, flights that the Chase Sapphire offers a platform for. They used to use Expedia. Now I think they're using an in-house platform for your travel booking. And then I need to know After I think about where I'm staying at and how I'm going to via the flight reservation, I need to think about where to dine at. So that's the zakat, infatuation platform. And then I want to be rewarded because I'm loyal to the JPM brand. So that's where the CX loyalty comes from. And of course, if I want a additional advisor or a travel planner, that's where Frosh comes in.
Yeah, this is so smart because people who spend a ton of money in dining and travel, they are probably more attractive customers, wealthier customer that JP Morgan wants to go after. But I would just say last but not least, JP Morgan also used M&A to expand internationally. For example, in UK, they bought a robo-advisor called Nutmeg, and in Brazil, they invested in a digital bank called C6. In general, I think the M&A strategy complements very well with the in-house organic investment.
Okay, so solid top line revenue performance, great profitability, and the impressive innovation, both organic and inorganic. So why don't we talk about how JP Morgan does against its peers?
Yeah, they're doing pretty well. Um, by revenue-wise, they slightly outperform their peer group. Return on common equity-wise, they significantly outperform their peer group. In terms of PE ratio or their valuation, they trade around one times above their peers, which reasonably reflects their outperformance in financials. Let's do a deep dive on JP Morgan versus its largest peers or competitors. First, JP Morgan is largest in size in terms of market cap. This is no surprise because they are the largest bank in the US. Secondly, in terms of revenue growth, at first glance, JP Morgan's 7% 5-year CAGR is in the middle of the pack. However, if you look at key major like retail banks such as BofA, Wells Fargo, Citi, JP Morgan significantly outperformed them. It is growing slower than investment banks like Goldman Sachs and Morgan Stanley, but it's natural because in 2021 these two banks experienced significant growth in their investment banking segment without the destruction of consumer banking business. Next, let's look at ROCE or return on common equity. Here, JP Morgan's 14% average ROCE is a clear outperformer here. Now, banks typically pay a dividend, so dividend yield is also an important metric here for us to look at. JP Morgan has 3.1% dividend yield, which is the highest among its peers except Citi, which is at 4.5%. However, we all know that Citibank's share price has significantly deteriorated recently because of their underperformance in revenue growth, as well as return on equity, which means their room for stock price appreciation is not so optimistic.
I think Citibank is an anomaly, as you talked about. So I think like getting like 3% dividend yield on a bank stock while the stock is appreciating, it's almost like investing in a treasury bond or like a high dividend company.
Yeah, you're right. That's important in current environment, especially. In conclusion, JP Morgan versus its peers, it's large and growing. It has a high and consistent average ROCE or return on common equity, and it has a high dividend yield. Pretty impressive. When looking at JP Morgan's share price return in the past 5 years, admittedly, it's in the middle of the pack at 24% versus its peers. However, we do believe it represents an opportunity for investors to capitalize on its future share price appreciation as a lot of the investment JPMorgan already made or is going to make hasn't reflected in its share price yet. But share price return is not the full picture when it comes to banks. Remember, banks typically pay a dividend because they are established business, and JPM pays a very decent dividend with a high dividend yield, top of the line dividend yield among its peers. So when we look at total shareholder return, which incorporates the effect of dividend and dividend in reinvestment, JPMorgan's TSR in the past 5 years was 40.2%, which is an outperformance compared to big banks such as Wells Fargo and Citi, and in line with Bank of America. It's lower than Goldman Sachs and Morgan Stanley, understandably, because these two are investment banks and they benefit a ton from the past 10 years of low interest rate environment.
Especially the last 2 years, like Goldman Sachs and Morgan Stanley, they have benefited quite significantly in the last 2 years because there has been a lot of M&A, IPO activity. So, but that being said, it's not consistent year over year. Now that we understand the business model, strategy, performance, and competitive advantages of this company, let's jump into the $1,000,000 question: when to buy?
First, let's take a look at JPMorgan's stock trajectory in the past 5 years. Here we compare JPMorgan to KBW Nasdaq Bank Index. To explain a little bit, this is simply an index that incorporates 25 plus largest banks in the US. So it reflects the stock performance of these big banks. So in the past 4 years, the important point here is JPMorgan share price appreciated 34%, which is 5 times or more than 5 times than KBW index. In terms of its share price trajectory details, JPMorgan is a lender, so it benefits from when the Federal Reserve Bank starts to increase interest rate. And you can see how the stock play out when Federal Reserve started to increase interest rate before the pandemic. And so from 2019 to 2020, early 2020 pre-pandemic, JPMorgan's share price premium against KBW expanded a little bit, actually quite a bit. And the same dynamic is playing out now in the latest rate hike cycle, when the Federal Reserve increased interest rate in the fastest pace in the past, I don't know how many decades. And look at JPMorgan's recent share price outperformance versus other banks. It's the premium is pretty impressive. As a sense check, we also look at what Wall Street analysts have to say about JPMorgan as a stock investment. There are about 26 analysts who provided ratings for JPMorgan. 16 of them rated JPM as a buy, 9 of them as a hold, and only 1 of them as a sell. So we kind of see this as a vote of confidence. In terms of target price these analysts gave JPMorgan, JPMorgan is currently trading at $131. The median target price is $135 by this analyst community. However, as a reminder, although this is a slight uptick, this is only a share price target typically for the next 12 months. In terms of valuation, JPMorgan is now trading at 10.2 times on PE basis, which is lower than its 10-year average PE at 11.4 times.
All right. So I've been a long-term shareholder of JPM for a few years now. So right now it's trading at $130. So what is your point of view on when is the right point of time to enter as a new shareholder or to add to your portfolio?
I'll try to frame it with a few data points here. The first point being, based on JPM's 10-year average PE ratio, its expected share price could be $144. Based on analyst midpoint consensus, its target share price could be $135. Now, they are only a tad higher than its current share price of $130.7, but it is still 24% below of its 52-week high. Putting this all together, given JPMorgan's solid business case, we would be comfortable with an entry point of below $145. Thank you for joining us today. We'll continue to share our research on new investment opportunities and stocks for your long-term and diversified portfolio. Please subscribe to our YouTube channel, SafeC, and visit our blog at www.safec.com.